Welcome back. Zeda has reported a solid set of interim results for the first half. This despite a challenging trading environment that impacted the group's top line. Zeda attributed the performance as a reflection of its strength and resilience of its diversified business model. CEO Ramasela Ganda joins us now with greater insight. Ramasela, thanks so much for your time today. So talk to me about, the 6 months that was. We are seeing profits higher, but, as I mentioned, some pressure when it comes to your top line with revenue declining 1.6%. Take me through some of the pressure points there and what weighed on the top line.
Thank you very much, Senator. What is really quite interesting with our results is actually when you look at the top line performance, we've actually performed better. The one area that we had a bit of a challenge was on our car sales. But when you look at it holistically, we sold lesser cars than we sold in the prior year, but we've derived even better margin. And I think our strategy during this period was to make sure, and it was focused on returns and not just to push the top line. So when you look at the earning, was a true, reflection of where the strategy was the strategy of a return, making sure that we deliver solid ones, and really the top line was not a key as much as the level of returns and the quality of our earnings that we delivered.
Let's zoom in on that car rental business, particularly when it comes to the sales of the vehicles and, where you are seeing lower volumes when it comes to car sales. Are you starting to see a turnaround going into the second half of the year, considering that last year, towards the end of last year, we started seeing those interest rates coming down. We started seeing, the two-part system withdrawals coming through and households under less pressure.
Look, when you look at our car sales, we sold all the vehicles that we had in stock. So it was never about a pressure of maybe we are stuck with a lot of stock and there's no market. We're able to sell the stock that we have. It was just the level of stock that we decided to keep to make sure that we get our margins right. But yes, indeed, with everything that you've said about, the easing up of the interest rate, consumer just becoming more comfortable, then we saw demand. But what is interesting about our business, because most of our cars are coming from our car rental business, which traditionally people know as a Group A and Group B. So those are lower level cars. Those are cars at an average rate of about less than 300,000 to sell them. So those are really the level where consumers can still afford them. Consumer will then downgrade to this level. So we have seen really a good activity on that level. I think the key to note was just we had no stock to sell because we've really bought to the level of managing our business effectively.
All right, let's look at the star performer of, the group, the leasing unit. What kind of trends are playing out on that front, Ramasela? What kind of customers driving growth? What kind of vehicles are being leased out the most on that front?
The corporate SA has been very supportive, and there's a shift. In the past, when you talk to CFOs, FDs, CEOs, and you talk about leasing, the immediate response was leasing is more expensive than buying. But, with the tightening of cash, companies have realized that they rather invest in their core business and move to the leasing business. So we have seen a diverse market, even as we said in our results, geographically, when we look at countries like Zambia, which was never a leasing business. We've seen the mining industry, Copperbelt, being very aggressive on the leasing industry. We've seen that still in the telecommunications sector, be it in Namibia, and also in South Africa, we still see agricultural sector still being very strong in the leasing and heavy commercial. So leasing is now becoming a new shift. And as we said, our strategy was about usership. This is really paying it off now that the company can use their capital for, their core business and leave the fleet, financing to the companies like us as we do proper fleet management.
You touched on, the greater Africa region and some of the geographies you operate in that are faring well. What about activity in Mozambique, considering that the previous or the reporting period also coincides with the unrest in that country?
Look, it is quite sad. Mozambique is really going through a lot at the moment, and we really hope that there will be stability for the business and, you know, the life, the social activity of the people of Mozambique to get back to really normal and normality, that life can be back. But at the moment, we are seeing subdued activity. When we look at it, we've got customers that are either not, you know, replacing their fleet or opting for early termination because they're exiting that country. And that's what makes it, the whole thing, quite sad, that it will cause more damage. We've been looking to see if there are any green shoots coming. The few companies that are now going back to Mozambique, but really still slow.
And talk to me about how comfortable you are with your debt levels, Ramasela. Net debt increasing to 6.3 billion from around 5 billion rands. I know Zeda is a company, you know, prioritizing growth, and you need the funds for that. I can imagine that the lower interest rates have also been working in your benefit on that front.
No, definitely. Look, I think one of the key things is that our business as well. So if you look at the car rental business, we have put more vehicles in our balance sheet than in the past. And the only reason that we will go for, you know, an asset in a balance sheet is that it will give us a better return than normal. So the reason we have increased our debt is to make sure that we also optimize on our return. So hence that. But it's also a seasonal and cyclical process. The second half of the financial year is normally the period where we deflate. You know, when we deflate, then you are going to see those cash coming back into reducing the debt. But also I spoke about our asset-light business, which is in the leasing side of managed maintenance. That's one area where we're driving extensively, where we get the cash to reduce, you know, the level of debt that we normally require. So it is one area that we look at effectively. With debt is very important, but we know that is not something to be reckless about. Hence, we are taking it on a short term with a view of turning into cash in a very short period of time.
Ramasela, thanks so much for your time and just taking us through the 6 months that was for Zeda. That was Ramasela Ganda, CEO of Zeda.